Yesterday, Bitcoin closed the monthly candle, and we got something that has never happened before. Take a look at the previous cycle top from 2017, and you mark up a horizontal line from that point. You can see that Bitcoin, for the first time ever, has just closed a monthly candle below the previous all-time high. This has never happened before. Bitcoin has never closed a monthly below the previous cycle all-time high post-halving. So things are definitely shaping up to be a lot different here in this cycle. But it's not just Bitcoin that's getting record-breaking, monthly bearish closes. The S&P 500 also just had its lowest monthly candle close of the cycle. So we can see that the markets are aligned. Regardless of the short-term differences between Bitcoin and the S&P, both getting the lowest monthly closes of the cycle, still very correlated. Now, the question is Bitcoin going to bottom out somewhere around here, or is there a lot more downside to go? Well, that's going to be determined most likely by the stock market. If the stock market can bottom out here, Bitcoin will as well. If the stock market goes down more, Bitcoin may actually end up coming back to levels much lower than we expect. If you look at the previous monthly candle closes, well, it's pretty far below us here. And we're going to talk about this huge gap in price and where Bitcoin could be testing in a bearish scenario. Recently, we saw a video from Alessio Rastani discussing the kiss of death signal for the stock market. A test below the 21-month EMA, a test back up, a rejection along it. That is the kiss of death. That is a very common bear market recession pattern that has played out in previous recessions. Now, there's a follow-up to this that I found recently, a secondary kiss of death signal that could help us determine if the stock market is going to find a continuation down or not. What is going to happen next? We're going to be analyzing that and figuring that out in this video. What is up, guys? Welcome back to the channel. So we just closed out the third quarter of 2022. Pretty bad way to end the quarter. Lowest levels of the cycle for the stock market. Bitcoin getting the lowest monthly candle close of the bear market thus far. And for the first time ever, Bitcoin has closed a monthly candle below the previous all-time high, right? We were always able to maintain a lot of growth from the previous all-time high in previous cycles. But this time, the all-time high, we are now below it. We are now closing monthlies below it, which is a potential sign of weakness. And it makes sense. We have a major tightening cycle taking place. After decades of lower highs on interest rate levels, for the first time ever, the trend is changing, shifting back to the upside. If you go on Google and you just type in earnings, you can see Nike coming in with terrible earnings, Micron coming in with bad earnings, Carnival coming in with bad earnings. There's just a lot of earnings reports that are now really showing their true colors, guys. We were talking about potential earnings recession coming up. So for Bitcoin, we are getting a record-breaking monthly close. We've never seen this before. Something different is taking place. And looking at previous cycles to try to line them up with this one, well, has been failing as a strategy or a method for a long time now. And so we have to start thinking about things playing out much differently this time than before. And that could mean multiple months below the previous all-time high. It's a possibility. In looking at the Bitcoin monthly structure, what we can see is that below us, we don't have any monthly candle structure until right here from December of 2017, coming in just below 14,000. So there's really nothing happening to the left. Looking left, not much going on until about 14K, which is where the traders settled up on the monthly time scale, on the monthly closes back in the 2017 bull market. We also found a wick high top just below 14,000 there, and more specifically, 13,900. So yeah, it's possible that Bitcoin, if the stock market continues down, we could be looking to test in this range before forming some kind of true bottom. How are we going to know that? The kiss of death signal, made famous once again by Alessio Rustani, is playing out, right? We had the rejection, we're coming down. But I found a secondary kiss of death signal that would be the next signal to sort of show us if we're going to get continuation in the stock market, to the downside, that is. And if you pull up the 200 SMA, and you go to the weekly, the 200 weekly SMA is the recession threshold. This is really the moving average where in recessions, that's where we're going below. That's where the major bearish moves take place. And what you'll notice is if you go to the chart in 2008 and you look at the breakdown of the 200 weekly, once we get significant closes below the 200 weekly, we bounce up and use it as resistance. This is the secondary kiss of death signal that could signal further continuation down. And then moving back here to 1974, break below the 200 weekly, come up, use it as resistance twice, secondary kiss of death, and we plunge. It is a potential signal to consider because the 200 weekly is a very important recession threshold moving average. So that is the next signal. We're at the 200 weekly now. And so we haven't actually broken below it completely yet. But if we do, the next thing I'm looking for would be a rally up to the 200 weekly. And do we find resistance there? And if we can't break back above it, then we would look for downside continuation. And so the question is, short term is really always hard to predict. Are we going to bounce off the 200 weekly into October, have some upside in October before coming down and get that secondary kiss of death later? Or are we just going to hold the 200 weekly? Or are we going to break down, immediately? Well, we're going to find out next week because we are settled up in a very, very key spot where I think we're going to get some big moves off this level. Now, something I talked about earlier was the seasonality of the S&P. The math shows that actually buying in September is the best month traditionally, though this is a recession, so it may not be that way. If you look at the average stock market monthly returns, September is always the most bearish of them all. And then returns follow in October. So this is another very key, interesting thing, is that if you go back to 2008 and we take a look in this recession period, what happened in October? Well, just like the seasonality chart says, September, mega bearish, go to the S&P. September 2008, mega bearish. And then right as we enter October, you see a little bit of bouncing, a little bit of an attempt to hold these areas, right? Some green candles, some green weeklies in there. Okay, so we dump hard into September and bounce up a little bit into October. Though once November comes around, we're back down again, and then we're back down into January 2009. So, okay, now let's go to 2001. What happened in October of 2001? Okay, so September, once again, closing out mega bearish right there. But we do, starting October 1st, the first week, we get a bounce. We get a bounce. Looking at the 1974 bear market. Going into September, wow, mega bearish. Oh, interesting, first week of October, we're rallying again. And that was the low of that recession period there. So, interesting. The seasonality seems to be pretty consistent even in bear markets. That October could yield some kind of returns, or could maybe at least we sort of settle up there before going lower. That is what happens in most of these areas. Now, another thing I want to look at with these previous recessions is when we first get to the 200 week, what happens? Well, 2001, we just snap below it immediately and spend multiple weeks below it. 2008, let's take a look. What happens when we get to the 200 weekly? Well, on this one, we held it and then come down below it later. Kiss of death, secondary kiss of death, down. So some conflicting things there. And it's always difficult to know, are we going to hold it? Are we going to snap down below it? Well, that is to be determined. I just wanted to show you guys the seasonality and how October can be sometimes an area where some support comes in. So maybe if we're going to go based on seasonality, we see some kind of range where we try to hold this level and then eventually break down after October. So we could see a little bit of chop here based on seasonality before going lower later. But once we do get below the 200 week, that's when I'm going to be looking for the secondary kiss of death to signal to me further downside or recovery, right? Because if we have the 200 weekly coming back up to it, that'll be the downside continuation signal if we use it as resistance, secondary kiss of death. And then we'll likely know much more whether Bitcoin is going to bottom out somewhere soon, somewhere around here, or maybe if we're going to have to test a little bit lower before we truly find the support we need to form a true bear market low. But that is pretty much all I wanted to talk about. I hope you found it interesting. Hope it gives you some signals to look out for. If you enjoyed this video, smash the like button, subscribe to this channel. The best way to support this channel is by far smashing the like button and subscribing, but also joining Patreon, and you can join my VIP Discord chat by joining Patreon. And if you guys want some rewards, we got some rewards below, thousands of dollars in exchange bonuses if you click the BitGet link there. We do have 90 slots left for a free $10, free 10% deposit bonus using the BitGet link below. But that's it, guys. Hope you enjoyed this video, and I'll see you all in the next one.